Hi, this is Jed with Forex Strategy Secrets. I want to share this concept on how to manage your trades better and use the zone pattern to stay in trades longer with less risk and be able to maximize the number of pips you can gain out of a trend. Because if you're just managing on one time frame, you're going to miss things. Now, that doesn't matter what time frame it is. If you're not looking at least 3 time frames, you're going to be struggling. Okay, what needs to happen is you need to first understand what a zone looks like on each time frame. Now, how I'm measuring it is based on where it is in relationship to the zero line on the Mayo and the AO and the filter. Okay, this trade was taken, textbook entry, off of the Mayo fresh cross and a 4-bar pattern. And it was on the right side of all 3 moving averages. So the entry is great. The zone, there's different ways to measure it. When the color changes on the Mayo and the AO, which are lagging indicators, so they're going to be a little bit slower, or the fresh cross on the opposite direction of the filter. Okay, in this case, I stayed in a little bit longer and was able to then get a early bird filter color that caused me to think, okay, I need to get out. This is losing steam. Okay, had I used a larger time frame with the criteria I just described to you on how to measure a zone, and I'm going to simplify that here in just a second, I would have actually been able to stay in a lot longer, if not have stayed in clear down into here and had this as an add-on and possibly some others as add-ons. Let's go to the 5-minute just so I can demonstrate what I'm talking about. I'm going to mark this exit signal so we can see all the way through. Here's the 5-minute. Okay, here's how you simplify it. You can quickly look and see what color and what side of the zero line it is on these, and that's fine. But to measure the zone based on when you should be getting out or not on the 5-minute is when it crosses the zero line on the filter. Entering the zone, going short, exiting the zone, going short. Okay, plain and simple. But you can see the 5-minute AO is just a solid, strong downtrend. That is zoning. I should have not gotten out of that position at all at that point if I had been managing on the 5-minute. Now, would I have gotten out here? Probably. But let's go. Let me mark this so you can see the difference. Let's go to the 15-minute. Before I would exit the trade, I want to see what's going on. Go to the 15-minute. Look. In the zone going short. Out of the zone going short. Clear down here. Okay, so managing just on that 2 time frames larger, I could have gotten a lot more pips out of each of these positions, especially that first one. Okay, now I want to show one more time frame to show you the power behind what this can do for you. Let's go to the 1 hour. It's still in a down zone, guys. It has not crossed the zero line on the filter. Now, yes, we are getting color changes. Yes, we are getting signals to say, hey, it's time to get out. Whether you take that or not, or wait for the zone to end on the filter cross, it's up to you. That's the executive decision you get to make as the trader. But I'm just showing you the power behind this zone patterning. Cross of the filter, going short, going long. That is the best way to measure zones. I'm going to show you an example of what that looks like in a little bit. But let me go back and analyze this other trade. This other trade, I didn't have an exit signal that you can see here, but on this particular filter, it flickered black. And instead of jumping up and checking the 5-minute, I just jumped out. I didn't even hesitate. Had I just waited a second or two longer, it would have shot down 10 pips, and it did, right after I exited. And I would have been, oh, I need to stay in that. I would have been really excited. But had I just looked at the 5-minute, it would have kept me from taking that exit signal, which really was a premature exit on my part, on all accounts. See, still in a strong down zone on all accounts. Fresh saddle. What was I thinking? Okay, This is something that happens to the best of us. What I call base hit syndrome. We get stuck in, oh, there's an exit signal on the one, exit signal on the one, and we don't look at the larger time frames to say, okay, do I still have time? So had I just stayed in on just the 5 minute, I would have been exiting clear over into here. Had I stayed in just on the 15, it would have been clear over into this area. So somewhere in the same area vicinity, give or take a few pips, depending upon what the price bars were doing and what time frame I went back down to manage. But I could have easily had the 15 or the 5 minute chart up and managing it and looking at all three time frames simultaneously. This is where I got stuck in that base hit syndrome on two different trades on the same trend in the same pair. Now I'm going to show you the example of another trader who's doing exactly what I'm describing here. And you're going to see some pretty amazing things. And it may shake you up a little bit, but you're going to like it, I promise. Okay, so John took several positions in the euro yen. This is on the 5 minute. Okay, you're thinking, wow, why did he go into this? Why is he in here still? He should be out. Why did he enter here? Well, it's because he was entering off of larger signals using that larger time frame. Now the time frame I'm focusing here on, and I know he's trading with, is the 1 hour. Okay, the 1 hour is what kept him in. And let me show you why. Here's where the zone started going short, clear up in here. And he didn't get out of the zone until clear over here. Okay, he made an executive decision here based on either money management or price point he was reaching or time or fatigue or whatever he was doing. That's his prerogative. We're going to give him the benefit of the doubt there. Even though there wasn't an exit signal, he chose to take it for his personal reasons. But he stayed in the zone and kept adding on in the lower time frames based on signals he got in those time frames, based on the fact that the 1 hour was still in the zone because it hadn't crossed the zero line this whole entire time. And look at the AO, strong zone short. The Mayo, strong zone to here, a little bit of a weak zone, and then strong zoned again. Okay, this is what he's doing to trade 311 pips in a small snippet of the market. So if you'd like to learn how to do this and follow along and trade with me and other traders that are doing this very same thing, I invite you to come learn about what we're doing. We have tickets available for various dates that you can take advantage of and maximize the number of pips you're getting in any trend, no matter what time of day it is, in pairs that are volatile and moving in your favor. All you got to do is just know how to do it. We're going to show you how to do it. You're going to get into the mind of the trader and see how we handle the psychology of it, how we handle the emotions of it, and how we trade mechanically based on sound and correct principles of following the zone. This is Jed with Forex Strategy Secrets, signing off.